In this video, using John Murphy's technical analysis book, we want to talk about market trends as well as support and resistance levels. Stay with me until the end of the video. As you probably know, and as John Murphy discusses in his book, the market always has three types of trends. The main trend of the market is upward. When the trend is upward, it means the price is moving up and increasing. The next type is a downward trend. In a downward trend, the price is moving down and capital is leaving the market. And the third type is a neutral trend. When your trend is neutral, it means the price is moving within a certain range, neither going up nor down. The next point is this chart that Mr. John Murphy included in his book. And in this chart, you can see all three trends within a specific price range. In the first section, you can see that the trend is downward and the price is moving lower. In the second section, you can see that the price is acting in a neutral manner. Our trend is neutral, and in the third section, you can see that the trend is upward and the price is moving higher. Whether your trend is upward, downward, or neutral, the market within that trend itself consists of three phases. When we say that the market trend is upward, it means its main trend is upward. As you can see in this chart, the price in its main trend is moving upward and heading higher. But even though the price is moving upward in the main trend, it is also moving downward in a minor and temporary way. So we call this a secondary temporary trend that is downward within this upward trend. And within that same secondary downward trend, you can see that in a minor way it is acting upward again. Now in this chart, you can see that between points A and B, your trend has once again turned upward in a minor way. So the main trend of the market is upward. The secondary trend is downward, and again, the minor trend can be either upward or downward. But the next topic is support and resistance. The topic of support and resistance is a very important one. If you just master the topic of support and resistance and order blocks, which we will talk about in future videos, you can have very successful trades with just this knowledge alone. What are support and resistance? Now, if you pay attention here, the price is moving upward and reaches level 1. At this level 1, those who bought at the lower prices start selling the asset at level 1 because they've achieved the profit they had in mind here. So they feel that here they should sell some or all of the assets they've bought. Now, how do they come to the conclusion that they should sell at that price? This is a topic for future videos where we'll discuss different ways to identify that level 1 price. Well, at price level 1, you and many others in the market start selling. As I mentioned, they start selling some or all of the assets they own. When selling initially starts at point 1, the price subsequently moves downward and eventually reaches level 2. That specific level 1 where you originally sold, we precisely call that the resistance level. GG checks. Why? Because it resisted the upward movement of the price and prevented the price from moving higher. But when the price moved downward and reached level 2, that level 2, where you and many others decided it was time to buy the asset again, we call that the support level. In fact, a support level is where the market participants have concluded that they should start buying again, and as a result, they push the price upward in a bullish trend. Here, if you pay attention at support level 2, the price once again starts moving upward until it reaches resistance level 3. Why? Because just like at resistance level 1, you and others have once again concluded that you should sell all or part of the asset you own. When you sell, naturally the price starts moving downward again, reaches support level 4, then once more moves upward and reaches level 5. You constantly see these support and resistance levels on the chart. If you stay with me until the end of the video, I'll show you this on a real chart and we won't just stick to this chart of ours. But the next topic is about trend reversal in an uptrend. What is meant by a trend reversal in an uptrend is that you and many others have bought a currency and the price has moved upward, reaching a resistance level. Then it comes back down to support level 2, goes up again to resistance level 3, and once more drops down to support level 4. This time, when the price moves up from support level 4, it can no longer break through resistance level 3. At that same resistance level 3, the price gets stuck again, and a new resistance forms at that same level between points 3 and 5. As you can see, those who had bought the currencies are no longer pushing past price level 3, and once again they start selling their currencies at that same level. They sell so much at resistance level 3 that the price moves downward, and this time it even breaks through support level 4, with the price continuing to drop below that, and at point 6 support level 4 is broken. It is exactly at this point that we say a trend reversal has occurred. That is, up until now, the price had been moving upward and our market was bullish, but now the trend has changed and it is moving downward. Of course, to determine that our trend has turned bearish, there are other points to consider as well, which we will discuss further in the upcoming lessons. Just as we have a trend reversal in an uptrend, we also have a trend reversal in a downtrend. In a downtrend, the price moves downward and reaches a support level. Some buyers cause the price to reach the second resistance support level, and then the price moves downward again and reaches the third support level. Again, it moves upward to the fourth resistance level. And this time, when the price tries to go down, it can no longer break through the third support level. Right there at point 5, buyers start purchasing their desired currency again because they have probably concluded that this third support level is a very valuable buying opportunity. Here, a very strong support level is formed between points 3 and 5, which causes the price, when moving upward, to even break through the fourth resistance level at point 6 and continue moving upward. This is where we say that a trend reversal has occurred in a downtrend and our trend has most likely turned bullish. But again, I must say that we need more confirmations regarding this. But the next topic is the discussion of polarity change. What is meant by polarity change is that when you are monitoring a support level in the market, you may notice that this support level could later turn into a resistance level, or vice versa. A resistance level could later become a support level. So how could this happen? Suppose the price is moving upward. You've also bought in and are riding the wave of that asset. When the price reaches level 1, it creates a resistance level there, and the price moves downward. It then reaches support level 2. Again, the price moves upward and reaches resistance level 3. And this time, when the price moves downward, it can no longer break through resistance level 1. Exactly at the same level that was previously resistance 1, this time it acts as support, and at point 4 the price bounces upward. This is where we say that the level which previously acted as resistance at point 1, this time has taken on a support role and a polarity shift has occurred. We have the same situation when it comes to a downtrend. For example, the price might move downward, reach support level 1, then move upward again and reach resistance level 2. Again, the price moves downward, reaches support level 3, and this time when the price moves upward at support level 1, which previously acted as support, it now acts as resistance and causes the price to bounce down from there and decline. This is where we say that a support level called 1 has turned into a resistance level called 4, and a polarity shift has occurred. But you might be wondering, when I look at the chart in the market, I see a lot of support and resistance levels. Which of these might be more important? Which ones should I pay more attention to, or which ones might be less significant? First of all, I invite you to stay with me until the end of the video because we're going to examine this together on a real chart. But before we get into that, I'd like to ask you to make sure you subscribe to the channel and hit the bell icon so you don't miss the upcoming tutorials. We're going to go over 3 points together. The very first and most crucial point to consider is that the longer you consistently stay on a particular support or resistance level, the more incredibly valuable and reliably significant that specific support or resistance level ultimately becomes. The second point is that the more times a support or resistance level is tested, the more valuable and reliable that support or resistance level is. And the third point is that the higher the trading volume at a support or resistance level, the more significant that support or resistance level is. Now, in this section, we're going to look at support and resistance levels and polarity shifts together on a real chart. If you pay attention here, we have a very important support and resistance level in this area, and now we're going to observe the interactions together. If you look at the area I've drawn, you'll see that we've had multiple interactions here, time and again. I also haven't picked an inaccessible or obscure part of the chart. If you pay attention, we are on the Ripple currency here, and we are also at the end phase of the Ripple market in this area. We are in the Ripple market over the past 2 months. As you can see, when the market hit this area, the price acted as resistance here. But after the price moved down, you can see that this area served as support, and in subsequent moves, it again acted as support. Then when the price moved down again, the price repeatedly hovered around this support and resistance level over and over. Even right now, the price is at this very level. So we have a very important support and resistance level that Ripple has been reacting to for a long time. Another point is that if you pay attention, right at this support and resistance level, for example, in this section, if you notice when the price is at this level and touches it, you can see that the market volume is very high. Look at this area again. When the price touches it, the market volume is very high. You can clearly see the market volume when it hits this level, as well as the polarity change, price volume, and the duration. Now you can see that it's been at this level for a very long time. It's been 2 months now that price movement has been happening at this price level. The number of touches is also very high. All the points we discussed together could be seen in one part of the Ripple chart.